Hey everyone, Kshitij here. Welcome to the Indian Market Research videos. Today we are discussing one of the crucial demergers of 2025, the Tata Motors story. If you have recently checked your demat account and saw a new name, Tata Motors Passenger Vehicles, then you are not alone. The company has officially split into two different entities. But why did they do so? And what does it mean for investors? Which company will deliver better results? Let's break it down all these things step by step into this video. The company has now split into two businesses: Tata Motors Passenger Vehicles, which includes passenger cars, electric vehicles, and the Jaguar Land Rover; Tata Motors Commercial Vehicles, which houses trucks, buses, and defense mobility operations. For shareholders, the transition is simple. For every one Tata Motors share you held before October 14th, you will now get one share of Tata Motors Commercial Vehicle. These new shares are expected to show up in your demat accounts within 30 to 45 days. Now let's understand the split in detail. Passenger vehicle business. Your Nexon, Punch, Harrier, Safari, the electric vehicle arm, fast-going Tata EV unit, and the Jaguar Land Rover. The new commercial vehicle company will include trucks and buses, defense mobility solutions, subsidiaries like Tata Devu Mobility and TML Smart City Mobility Solutions. Plus, it sets to integrate the proposed €3.8 billion acquisition of Iveco Group's NV's commercial vehicle operation. This could triple combined revenues and expand their electric and alternate fuel presence. Essentially, two different business cycles, one driven by retail and luxury demand, the other one by industrial and infrastructure growth. Now, let's talk numbers because this is where it gets interesting. In the second quarter of FY26, Tata Motors domestic passenger vehicle sales stood at 1.4 lakh units, up around 10% year on year. September alone was stellar, over 60,900 units, a massive 47% jump on year. But if we look at the numbers against rivals like Maruti Suzuki, they still dominate the market, followed by the other key players. Its EV division, led by Nexon EV and Tiago EV, continues to lead the Indian EV market with almost 30% volume growth year on year. Now the flip side, profit contribution. Jaguar Land Rover is still the engine of profitability. In the June quarter, out of Tata Motors 1 lakh crore consolidated revenue, 75,900 crore came from JLR, while the domestic PV segment added 10,000 crores. So the passenger vehicle business will heavily depend on how JLR performs globally, especially in China and Europe. Experts believe this is the value unlocking move. They believe that going forward, debt load will be more transparent of the company and the capital allocation will be sharper. JLR's strong profitability could lift the passenger vehicle segment, while commercial vehicles' steady cash flow will provide a cushion against the short-term volatility. In short, this separation helps investors value each business separately. In the near term, they may see some volatility as the stocks find their own fair value, but in the long run, this may be a more strategic reorganization in the auto sector. So is Tata Motor demerger a value unlocking play, or is it adding more to the confusion for the investors in the short term? Do let me know in the comment section what are your views, and do not forget to like, subscribe and share this video, and follow Indian Market Research for more such content. Thank you.